Module Overview. Introduction. The globalization of political economy. In a world where borders are increasingly porous, political decisions in one country can spark economic ripple effects across the globe. This module focuses on the international political economy, IPE, the discipline that examines how political forces, global institutions, national governments, and transnational corporations interact to shape the global economy. It highlights the role of states and markets in global governance, the power dynamics between developed and developing countries, the structures of global trade and financial flows, the strategic role of international institutions like the IMF, World Bank, WTO, and BIS, the economic influence of geopolitical decisions, sanctions, aid, and debt. Understanding International Political Economy, IPE, interdisciplinary field that explores how political interests and institutions affect global economic interactions, how global economic structures and crises influence political power, the distribution of wealth, power, and resources across nations. IPE blends insights from economics, trade, capital flows, currency exchange, political science, power, sovereignty, governance, international relations, diplomacy, conflict, alliances, sociology and law, development, regulation, social movements. IPE examines how global capitalism is shaped, challenged, and reinforced by political systems and ideologies. Historical evolution of global political economy. Key eras in global economic order. 1. Mercantilism, 16th to 18th century. National wealth measured by gold reserves. Colonialism, trade monopolies, protectionism, state power, market freedom. 2. Classical liberalism, 19th century. Free trade, laissez-faire capitalism. Thinkers like Adam Smith, David Ricardo Britton, becomes global hegemon. 3rd. Keynesianism, post-WWRE, mixed economy, state regulation, social welfare, Bretton Woods institutions created, IMF, WB, US becomes global leader. 4th. Neoliberalism, 1980s to 2000s, deregulation, privatization, globalization, structural adjustment programs, SAPs, expansion of multinational corporations. 5. Geoeconomic rebalancing, 2010s present, rise of China, BRICS, alternative financial systems, resurgence of nationalism, trade wars, and multipolarity, digital currency, climate diplomacy, and financial sanctions as tools of power. Global trade and economic interdependence/modern economies are connected by global value chains, multilateral trade agreements, supply and demand imbalances, currency exchange volatility, interdependence, dynamics. Raw materials from Africa, manufactured in Asia, consumed in Europe. Disruption in one link, e.g. COVID-19, Ukraine war, affects all others. Nations become vulnerable to global shocks even with strong domestic policies. Global capital flows and investment networks. Capital flows refer to cross-border movements of money for investment, trade, or lending. Types of capital flows. Foreign direct investment, FDI. Factories, subsidiaries, joint ventures. Portfolio investment. Bonds, stocks, hedge funds, remittances. Diaspora earnings sent home, official development assistance, ODA. Grants, loans from richer to poorer nations. Sovereign wealth funds, SWFS. State-owned global investment arms, e.g. UAE, Norway. The politics of aid, debt, and dependency. Foreign aid and debt are not neutral tools. They often come with strings attached. This creates dependency syndrome in developing nations, sovereignty trade-offs due to loan conditions, resource extraction disguised as assistance institutions involved, IMF, International Monetary Fund, stabilizes currencies, imposes fiscal reforms, World Bank, funds infrastructure, education, health projects, Paris Club and London Club, manage debt restructuring, Belt and Road Initiative, China, infrastructure diplomacy with debt implications, the strategic role of multinational corporations, MNCs. MNCs operate across borders but often influence politics at home and abroad, lobby governments for favorable trade terms, shape labor laws, tax policies, and intellectual property regimes, influence elections through campaign finance, relocate to avoid regulation or taxation, race to the bottom. Sometimes more powerful than small nations, e.g. Apple, Shell, Amazon. Global economic power and hegemony. IPE identifies hegemonic stability theory, which argues that the world economy functions best when a dominant power enforces rules, like the US after World War II. However, we now see decline of US unipolarity, rise of China and regional power blocs, weaponization of finance, e.g. SWIFT bans, sanctions, trade fragmentation, and digital protectionism. This creates a complex and unstable multipolar system where economic tools are wielded as weapons. The rise of South-South cooperation and alternative economic systems. Global economic governance is being challenged by BRICS, Brazil, Russia, India, China, South Africa, New Development Bank, de-dollarization goals, African Continental Free Trade Area, AFCFTA, Pan-African Trade and Industrialization, digital currencies, Bitcoin, central bank digital currencies as alternatives to traditional banking, regional blocs, ASEAN, ECOWAS, Mercosur. These alternatives seek to reshape global trade rules and reduce dependence on Western-led institutions. International sanctions, trade wars, and geopolitics. Trade and finance are now weapons of war. Sanctions, U.S. versus Iran, Russia, North Korea. Trade wars, U.S. versus China, tariffs, tech bans. Currency manipulation accusations, cyber economic warfare, hacking banks, digital sabotage. These tools influence political regimes, human rights, elections, and international alignment. Climate diplomacy and the political economy of green finance. Global politics now intertwine with carbon credits and emissions trading, green bonds and sustainable investing, climate aid for vulnerable nations, energy transition conflicts, e.g., oil exporters versus climate funders. Africa and other regions must strategically position themselves to benefit from global green investments without falling into new dependency traps. Conclusion: global power is political, not just economic. The international economy is not driven by supply and demand alone. It is shaped by power, ideology, alliances, and rules. Understanding international political economy empowers nations and citizens to negotiate better trade deals, avoid exploitative debt traps, strengthen domestic institutions, build regional coalitions, promote ethical globalization,